Global markets don't just panic overnight. They panic when something breaks the pattern, when a trusted ally suddenly changes sides. And that's exactly what happened this week. Canada, one of America's oldest and closest partners, just took a step that no one expected, aligning itself with China in a move that sent shockwaves through Washington and Wall Street alike. Within hours, trading floors went silent. Analysts scrambled for explanations. And the question echoing across every newsroom was the same. Why would Canada side with Beijing? And what does this mean for America's power in the world? This isn't some symbolic gesture or diplomatic misunderstanding. It's a signal, a clear one, that the post-Cold War order may finally be unraveling. Because when even your allies start shifting toward your rival, it's not just a story about foreign policy. It's a story about decline, about trust, and about what happens when economic reality collides with political loyalty. For decades, Canada and the United States have stood shoulder to shoulder, bound by trade, defense, and values. But behind the headlines, something deeper has been brewing. Frustration, economic pressure, and a growing sense that Washington no longer holds all the cards. So, what exactly did Canada do? And why is the world reacting like this? That's where this story truly begins. The reaction was instant. Within hours of the announcement, global markets began to shudder. The Canadian dollar slipped. Oil futures swung wildly. Asian exchanges opened to chaos. And by the time New York trading began, investors were already bracing for the worst. To understand the panic, you have to realize how fragile confidence has become. For years, global stability has rested on one unspoken assumption that America's allies would remain aligned with Washington. When that assumption cracks, everything else does too. Analysts on CNBC called it a wake-up call too. Investors who believed the Western Bloc was unshakable. Traders weren't just selling stocks, they were selling certainty. Hedge funds moved into gold and the yuan. The message was clear. The geopolitical ground had shifted. Even more unsettling was the timing. The U.S. economy has been walking a tightrope, high debt, slowing growth, and an uneasy consumer base. A shock like this doesn't just ripple through Wall Street, it threatens the very narrative of American economic dominance. Meanwhile, Beijing's state media wasted no time. They framed the event as validation proof that the world is recognizing China as a stable, reliable alternative to an overstretched America. The optics were powerful. An American neighbor choosing to deepen ties with China, right as Washington warns of Beijing's influence. And as the markets tumbled, a deeper fear emerged that this wasn't an isolated act of economic pragmatism, but the beginning of a larger realignment. If Canada, with its deep trade and defense ties to the U.S., can recalibrate its loyalties for economic advantage, who's next? That question hanging in the air like a storm cloud is what truly shook the markets, because financial systems can handle bad news. What they can't handle is uncertainty. But the real story isn't in the numbers or the trading charts. It's in the motive why Canada made this move, and what it reveals about the shifting center of gravity in the global order. And to understand that, we have to look not at the markets, but at Canada itself. To grasp the magnitude of this shift, we have to step back and look at Canada's position in the global hierarchy. For decades, Canada's economic and political identity has been tightly intertwined with the United States. Over 70% of Canadian exports go south of the border. The two nations share the world's longest undefended border, military cooperation through NATO, and deep integration in industries from energy to defense. So when Canada makes a move that appears to favor China, whether it's a new trade initiative, a critical mineral export deal, or participation in a Chinese-led infrastructure forum, it's more than policy. It's a statement. On the surface, the motivation seems practical. Diversify markets, attract investment, and protect Canada's economy from American turbulence. But underneath lies something more profound, a quiet recognition that the world is changing faster than Washington is adapting. China has become Canada's second largest trading partner. Its demand for resources like lithium, nickel, and rare earths, all abundant in Canadian soil, offers economic security that U.S. markets can't always guarantee. And as energy politics evolve, China has positioned itself not as a competitor, but as a buyer willing to play the long game. Canadian policymakers are reading the map differently now. Instead of seeing alignment with China as betrayal, they see it as hedging against a future where global power is shared, not dominated. That's why this story matters. It signals that even among America's closest friends, loyalty is being replaced by calculation. And if that sounds familiar, it's because this is exactly how empires begin to lose control, not through revolution, but through quiet rebalancing. Because while Washington debates ideology, Beijing is dealing in incentives. And that brings us to the next layer of this crisis, China's silent, methodical victory. China didn't win this overnight. This moment, Canada's pivot, is the result of a 20-year strategy that few in the West truly understood. While the USS focused on military dominance, China focused on economic gravity. It realized that in the modern world, influence flows not from bases and bombers, but from contracts and credit. Step by step, Beijing built a network of dependency. The Belt and Road Initiative stretched across continents, tying nations to Chinese financing. Trade routes were secured, supply chains reoriented, and infrastructure debts deepened. Even nations once skeptical of China, from Saudi Arabia to Brazil, eventually found it too costly to ignore. Now that same gravitational pull has reached North America's doorstep. China doesn't need to threaten or pressure. It simply offers what struggling economies need: stability, investment, and access. It's a subtle, almost elegant form of power. Beijing frames its deals as mutually beneficial partnerships. But behind that language lies a deeper truth. Control doesn't always require confrontation. Sometimes it only requires patience. And while Western leaders often underestimate this approach, China understands something fundamental about global psychology. Nations don't want to choose sides. They want to choose survival. By offering alternatives to American systems, from trade financing to digital currencies, China gives countries the space to act independently while slowly drawing them into its orbit. So when Canada moves toward China, it isn't because Beijing suddenly became a trusted friend. It's because China created a world where not moving toward it has become an economic disadvantage. That is the silent victory, the reshaping of global incentives without firing a single shot. But for the United States, it presents a problem far deeper than trade or diplomacy, because what's really at stake isn't economics, it's credibility, and that's where America's dilemma begins. For over 70 years, America's global influence has rested on a simple equation: economic dominance plus military protection equals loyalty. But that equation is breaking down. In recent years, allies who once stood firmly behind Washington have begun to question the costs of doing so. Trade wars with Europe, tariffs on Canada, and Mexico, sanctions that sometimes punish friends as much as foes. The cumulative effect has been erosion, slow, invisible, but unmistakable. What we're seeing with Canada is not an isolated act of rebellion, but part of a larger trend. Saudi Arabia expands trade with China. India balances between Washington and Moscow. Brazil embraces BRICS. Even Europe, historically tied to U.S. strategy, now speaks openly of strategic autonomy. For the first time since the Cold War, America's alliances are becoming conditional, no longer driven by loyalty, but by leverage. And this shift terrifies Washington because it signals that the network of trust built over decades is beginning to fracture. Internally, the U.S. faces its own contradictions: political division, debt-driven growth, and a manufacturing base hollowed out by globalization. These weaknesses make it harder to project power abroad. Allies see it, rivals exploit it, and every time Washington warns of choosing the wrong side, more nations quietly decide that the old rules no longer apply. In short, the U.S. is discovering what every superpower eventually learns: influence cannot be commanded, it must be renewed. And when renewal fails, history doesn't pause, it simply moves on. The markets have already sensed it, the allies are beginning to act on it, but the real tremor, the one still coming, will be economic, not diplomatic. Because when confidence in the U.S. system starts to waver, global money will follow the same path Canada just took toward the east. Beneath the headlines and the market charts lies a quieter, far more dangerous truth. The foundations of the global economy are shifting, and Canada's move has simply exposed the fault lines. When markets panic, they don't just react to news, they react to uncertainty about the future. And Canada's alignment with China raised a question investors dread. What if the U.S. no longer controls the flow of global trade and trust? For decades, the dollar's dominance made American influence automatic. Nations could disagree with Washington, but they still needed its currency, its capital, and its market access. That monopoly is now under threat. China, through careful financial engineering, has been building parallel systems. Yuan-based trade settlements, digital currency pilots, and bilateral agreements that bypass the dollar entirely. Now imagine that shift reaching North America. If Canada starts pricing energy exports or rare minerals in yuan, even symbolically, it chips away at one of the last pillars of U.S. supremacy, the dollar's role as the world's reserve currency. That's why the markets truly panicked. It wasn't about one trade deal or a diplomatic handshake. It was about the possibility that America's financial architecture is no longer untouchable. Commodities traders know it. Central banks know it. The balance of power in finance is beginning to reflect the balance of power in geopolitics. The irony is that America once encouraged this very system, global trade interdependence, believing it would cement U.S. leadership forever. But interdependence cuts both ways. Once other nations develop their own networks, they no longer have to wait for Washington's permission to act. The markets sensed that change. The panic was not the disease, it was the symptom. And history has seen this before because every empire that rises on financial control eventually faces the same turning point. When we study history, patterns repeat with uncanny precision. In the early 20th century, Britain ruled the global financial system. The pound was the world's reserve currency. London, its capital of trade and credit. But after 2 world wars and the rise of America's industrial might, Britain's power slowly faded, not because of defeat, but because others learned to compete. Today, the United States stands in a similar position. The dollar has replaced the pound. Wall Street has replaced London. And yet, the story feels eerily familiar. Empires rarely collapse suddenly. They erode quietly through overextension, internal division, and the loss of faith among their allies. The Roman Empire once controlled half the known world, but its greatest threat wasn't invasion, it was fragmentation. Provinces stopped sending taxes. Allies stopped believing in Rome's protection. That's how power fades, not with rebellion, but with indifference. Canada's decision may seem small compared to those historic shifts, but symbolically it represents the same phenomenon, a trusted province of the global American order acting on its own interests. What's more, every fading empire misreads the warning signs. Britain thought its naval dominance would last forever. The U.S. believes its technological and financial systems will guarantee loyalty. But history shows that once alternative networks take root, they grow faster than the empire can react. We are watching a similar cycle play out in real time, one that will define the coming century. But unlike past empires, this transition won't be defined by war. It will be defined by systems, data, energy, trade, and money rearranging themselves into something entirely new. And that new system already has a name, the multipolar world. For decades, global power revolved around a single axis, Washington. Today, that axis has fractured. Power is dispersing eastward, southward, and inward toward nations once dismissed as emerging. China and Russia lead the BRICS bloc, now expanded to include new energy giants. The Middle East, long dependent on American security, is diversifying partnerships. Africa is drawing infrastructure funding from Beijing instead of the IMF. And now even North America's northern neighbor is signaling that the unipolar moment, America's uncontested dominance, is over. This is the new reality, a multipolar world where no single power dictates the rules. Nations form flexible alliances based on needs, not ideology. Trade networks cross old boundaries. Technology hubs rise outside Silicon Valley. Energy routes shift from pipelines to digital grids. In this landscape, the USS can no longer rely on loyalty alone. It must compete not just militarily or economically, but morally. The world is asking a quiet question. What does America offer now that others can't? For China, the answer is clear predictability, investment, and access to markets. For the U.S., the answer is still forming. It will depend on whether Washington can adapt to a world where influence is negotiated, not assumed. The irony is that a multi-polar world doesn't have to be America's downfall. It could be its renewal if it learns to cooperate rather than command. But so far, Washington's response has been denial, not adaptation. And that's why Canada's decision feels like a warning shot, not against the U.S., but against the illusion that the old world order still exists. Because what's emerging now is irreversible, a planet no longer waiting for permission. It's easy to think of all this as distant geopolitics, trade routes, currencies, high-level diplomacy, but the truth is, these shifts reach directly into the daily lives of ordinary Americans. Every time an ally like Canada rebalances toward China, it sends a signal through the global economy that ultimately hits Main Street. Energy prices fluctuate, imported goods get more expensive, and investment uncertainty drives up inflation. That translates to higher grocery bills, higher mortgage rates, and shrinking retirement accounts. When the dollar's dominance weakens, the cost of living doesn't just rise, it accelerates. The privilege of printing the world's reserve currency has allowed America to borrow cheaply for decades. If that privilege erodes, debt becomes heavier, and the government's ability to cushion crises from recessions to pandemics weakens. It also affects jobs. Manufacturing that could have returned to the U.S. may instead move to regions aligned with China's supply chains. Technology partnerships that once flowed through Silicon Valley may shift toward Asia. And most dangerously, the psychological confidence that underpins the American dream that tomorrow will be better than today begins to fade. But there's another side to this story. Moments of disruption have always been moments of reinvention. If America chooses humility over hubris, this shift could spark a new kind of leadership, one based not on domination, but on cooperation and credibility. For ordinary Americans, that means understanding that the world is no longer us versus them. It's adapt or decline. Because in this new era, resilience will matter more than rhetoric. And the first step toward resilience is recognizing that the panic in the markets is really a mirror showing us what needs to change at home. In the end, Canada's move will be remembered not as an act of betrayal, but as a revelation, a sign that even the closest allies can no longer afford to ignore the gravitational pull of a changing world. It marks the moment when America's dominance stopped being assumed and started being questioned. But it also marks a crossroads, a choice between doubling down on old strategies or evolving into something wiser. History tells us that empires fall when they stop listening. Nations endure when they adapt. The question now is simple yet defining. Can the United States reinvent its role before the world moves on without it? Because make no mistake, the world is moving. Markets are shifting, alliances are realigning, and power is being rewritten in real time. The panic we see today may one day be remembered as the moment the 21st century truly began, not in war, but in transition. And that's why this story matters. It's not just about Canada or China or Wall Street, it's about us, about whether we recognize the warning before it becomes the obituary. So if you've made it this far, you already understand how critical these changes are. Don't look away. Stay informed. Stay curious. And if you want to keep following the deeper truth behind the headlines, the shifts shaping the next decade, make sure you subscribe and share this video with others who care about where the world is heading. Because this isn't the end of an era, it's the start of the next one. And we're all living through it.